Well, Eric, it's been a big week for the metals. Recording here on Thursday afternoon, and after being hit earlier in the session, gold and silver are almost back to their highs for the week and the year again. Gold trading back just under 1290, silver trading as we record here right around 1860 late in the access market here on Thursday. And we've seen big moves in the metals here really over the past week since the political scene has been rather destabilized. What's your take, Eric?
Destabilized and trying to help precious metals at a time when they really needed it because they were being pressured, and that's a good thing to see, despite the fact that it's never good to see war, drums beating. But hey, take it. It's interesting to see the kind of reaction that we see to geopolitical events over a decade plus of time. This entire bull market spans since 2000 through fits and starts and whatnot, but one thing has always been consistent is that anytime the threat of the U.S. dollar and U.S. bonds as being perceived as a safe haven asset of choice comes under any kind of challenge, whether it's geopolitical events or whatever. I mean, even our listeners think back to what happened after Brexit. We had $130 intraday move, $140 move in gold. It was a huge move in the 24-hour period, and over the course of the following 2 weeks, that was basically sucked out of the market, and the majority of it actually sucked out of the market almost immediately, the next couple of days of trading. We see this over and over and over again, where we have major catalysts that are nothing but positive influences for gold under normal economic rules and market rules, and then, lo and behold, we're seeing China move 150,000 troops to the North Korean border. We see Trump lob 59 cruise missiles, potentially even killing Russian servicemen. I mean, the kind of geopolitical events that normally you would assume are going to be major sustained catalysts for gold are attacked, and we can see that happening this week. Earlier this week, we saw another example of these really whacked out, totally bizarre things going on with the London PM fix. Gold closed at the London PM fix $13 below the spot price. And that's not supposed to happen. That's a complete market breakdown, and it broke down because the manipulators broke it. And we don't see any discussion about this in the press. Our listeners would probably recall back in January of last year, we had that 59-cent discrepancy or whatever it was, 57 cent. I mean, I'm doing this strictly by memory. I'm probably botching it, but in silver with their PM fix in London versus the spot, that ended up being the bottom for that period, and then we took off all the way through most of the year through the summer. We were talking earlier about how it probably peaked out around July when we're checking out the charts before the show last year. And this is prima facie evidence of outright manipulation. These kind of things are not supposed to happen. It's a complete in-our-face breakdown of the market, and it's not an accident that that's happening this week in response to trying to keep the lid on precious metals. Gold is still resisting. I mean, today we are recording on Thursday. Gold going into the London PM fix also saw a downdraft, and then it's recovering as we go into the after hours and get ready for Friday's trade. These are examples of manipulation. The miners right now are taking another period of heat where there's no reason why the miners should be selling off as much as they are today. If we look at GDXJ, for example, it closed today down $1.34, 3.52%. I mean, yes, the regular equity market is under pressure, but gold and silver have been performing fantastically for the last couple of trading days. So, this is an example of where the cartel tries to go after leverage points where it's not as hard to manipulate. And I made this argument a couple of weeks back when we began the cycle of seeing gold pushed below 1260, and it was the miners that led that action. The cartel is trying to go after sentiment any way they could, and I think that's what we're seeing today and throughout this week too, in just capping efforts. So, the market is strong. and we have international demand, physical demand as well too, and a lot of hedging going on. Despite the fact that in North American markets, it seems like the stacker community isn't, snoozing. I think that has more to do with economics and buyers fatigue, and the market being largely already everyone wanting in, being in. There's very different pools of investors when you compare the stackers that buy coins from SD Bullion versus the paper traders on the COMEX and the whims that motivate each. So overall, the market is holding up and it's responding well to the kind of forces that one would expect to see move metals upward. But we still see all of these examples of the cartel trying to keep a lid on things, keep momentum down, keep people moving into U.S. bonds and protection of the dollar versus other forms of safe haven asset buying.
So, Eric, what's your take? I mean, if we don't see World War III or even just a massive regional conflict in the next week here, are they going to be successful in walking gold and silver back down and erasing all the gains over the past week? Or do you think there's other fundamental reasons involved in the move here over the last 10, 14 days?
At best, I think we're probably going to go horizontal if they're able to keep momentum contained. But given the context of the decline that we already saw earlier in this year, where, going from a couple of trading days before March all the way down to mid-March or so, that decline was pretty substantial. And I think that took a lot of the speculative froth out of the market. This week we saw, a couple of days where there was a huge amount of gold new contract issuance on the COMEX, which is soaking up the new buyer demand that's coming into the market. So they're trying to slow all of this momentum, and we can see it. But the momentum is coming at a time when the U.S. economy is stalled. We have the Trump tax cuts that are missing in action. The infrastructure spend is something that's convoluted. People who were looking for this giant reflation trade coming on the back of the United States with all of the reforms that people were excited about when Trump was elected is now just a big black cloud. I mean, there's no certainty whatsoever. It's part of the reason why Trump actually launched this attack on Syria, is because his domestic political prospects are really quite horrible, and so it's a wag the dog kind of event. We should probably speak a little bit about what happened, too. It looks, as far as best I can tell, looking at what respected intelligence analysts and respected journalists who have their ear to the ground when it comes to active service intelligence sources, people like Philip Giraldi, ex-CIA, Ray McGovern, former briefer to U.S. presidents. I mean, he's briefed 4 presidents and served for multi-decades in the CIA. People like him and their sources have come to pretty well a consensus that this was a depot that was managed by Jabal al-Nusra, which is now having been renamed twice, but they are an al-Qaeda affiliated group that has worked with like kitchen-based sarin and other gases and chemical weapons that they've been able to procure through their sources. And it looks like that this was a depot that was a hit that Syria's jets were not aware that it actually had these chemical weapons in it. So we've had this, propaganda front where Trump is meeting with President Xi in China the very day that these attacks were launched. And apparently, according to an interview that Trump did with Maria Bartiromo on Fox News, he was having dinner and Xi and Trump were enjoying a nice big fat chocolate cake when Trump turned to him and said, well, we just bombed Syria, so you better take what's going on in North Korea seriously. That was the subtext of the message. So, I don't know. What's going on now is so loopy and so lacking of focus in the Trump administration that I think just the overall confidence in markets is reflecting this too. And stock markets rolling over, the economy is weak, the entire domestic program that Trump launched his campaign on is now open in question, and so this reflation trade is it's fading, and this is going to end up feeding into that whole scenario of the second quarter, maybe in third quarter spilling over of a stock market correction I've been talking about for the better part of a year. So that should help precious metals. People are going to want to get into alternative assets when this illusion of the inflated financial assets becomes better understood by more people.
Well, to be fair now, Eric, let's take the other side of that. We're hearing reports that Kim is about to test a nuclear weapon. Well, let's take the other side of that. If we see any escalation of conflicts, any more attacks in Syria, or any more escalation in North Korea, whether that be the North Koreans detonating a nuclear bomb, or any U.S. actions, whether that be economic sanctions or military actions here. We're looking at gold $12.90 right now, silver $18.60, and as you've been speaking about, the COMEX open interest has been massively increasing as new papers coming onto the market. Silver has been just recently near all-time record highs in open interest. So we're looking at massive short positions right now from the bullion banks. So let's take the other side of it. What happens if suddenly we have an escalation crisis in North Korea and gold jumps to $13.50, silver jumps to $19.50? Are we looking at potential where you could see a short squeeze, really just due to the fact of their attempts to cap the move over the last couple of weeks here?
Yeah, absolutely. I don't buy into that whole notion of a market signal failure, giant short squeeze, breaking the COMEX on, over the decade plus that people have speculated about what will happen in the end game. That has been one of the working hypotheses of people within the alternative asset community. I don't think that's going to happen because COMEX can just simply be closed, or, the force settle with cash settlement and do that for a week until things calm down. They can do anything they want, basically. So, yeah, short squeeze in a modest respect, adding $1, $2, $3, yeah, of course we can see something like that, and we would in fact see something like that if we had a geopolitical catalytic event that was big enough to shake things up that people would not be able to stop. The market managers that we love so dearly would not be able to deal with that kind of a sudden burst of momentum. It's kind of analogous to what happened when Brexit was somewhat of a surprise. So $130+ intraday, that's the kind of thing that we would see.
Now, one thing we want to touch on here, as we were kind of chatting before the show, Eric, what's fascinating to me is right now here over the last month and a half, we're witnessing probably the worst sentiment and worst demand that the precious metals market has seen probably since the financial crisis started in 2007, 2008. This market's just dead right now in the U.S. as far as retail physical demand. It's not just silver, it's gold. We were talking Gold Eagle, backdate premiums are down quite a bit, 90% silver. Eric mentioned that he took some of his 90% to a local coin shop and was offered 7% under spot this week for 90% junk silver. So that
I should have sold to you.
He should have. But that just tells you what the sentiment and what the demand is like right now. Looking at the U.S. Mint's numbers, the U.S. Mint sold 125,000 Silver Eagles this week. That's 10% of their mint capacity. They can mint 1 million coins a week, and they've sold 125,000. And this is a period of time when we're on the brink of war on multiple different fronts right now. It's crazy.
Yeah, the international demand is definitely supporting the market, and there's buyers fatigue in North America. The other thing, too, that we got on the horizon is on April 23rd, we have the first round of the French elections, and right now Le Pen is tied for first place. The pollsters and mainstream media in France are trying to spin the notion that she's not going to win the second round because there'll be a runoff. But I think there's a pretty decent chance that Le Pen is actually going to win, and she's very anti-Eurozone and Euro currency bloc, and one way or another, the European project project is going to splinter and the euro itself is going to splinter. I mean, the kind of macro forces that are happening in like 10 countries of the European Union are so profound and multifaceted that it's going to just spin out of control, and it's just a question of when, not if.
And Eric, I have a feeling that, I mean, France is obviously not the UK, but I have a feeling that the market may have a bigger reaction were Le Pen to win than you even saw with Brexit, because the market's going to take it that, okay, this wasn't just a one-off. Now we had Brexit, Trump, and now this.
Yeah. And also, you know, the pound sterling is a separate currency, whereas there is no French franc, and Le Pen wants to reintroduce the French franc. And that will basically put a wedge through the very core of the euro currency. Euro currency block. I mean, in time, it's actually going to be better for the euro because a German-led euro with hanger-on countries like Holland and other like Austria and Luxembourg, you know, countries like that will probably come along and be a part of the new euro union once, or the currency union once it is up and running. And that'll be a very strong currency because there will not be lesser economies hanging on and pulling down the, you know, opinion and view of it being a sound currency. You know, the big countries, for example, Southern European countries. Germany actually gets a gigantic subsidy because the euro is lower relative to the U.S. dollar and other currencies precisely because of the mixed nature of stronger economies and weaker economies all mushed together in some kind of, you know, stew that ends up, you know, coloring the way people on a global stage look at the euro currency in and of itself. If it was a more slimmed down euro, it actually would be considered a stronger reserve asset, and it would trade with a higher value vis-a-vis the U.S. dollar on a consistent bias basis. So over time, that actually might be something that after a year of trading or after a year of settling out with whatever dynamics happen when the euro begins to morph and mutate, it might even be something that'll take away some demand from gold, you know, 2, 3, 4 years further out in the future kind of scenario. But in the near term, you'll end up having a lot of people within France, for example, freaking out and wanting to buy gold because they want to make sure that they get out of their soon-to-be converted euros that will depreciate as francs against the buying power of the other products that they would buy based in the Eurozone in the rest of Europe. So that'll be fascinating to see how all of this works out. But in the near term, it definitely will be kind of like Brexit in the sense that it'll be a positive for gold, and we'll see a spike. If Le Pen wins in the first round, we'll definitely see a spike, and that'll be April 23rd. So our listeners will be behooved to keep an eye on that on the calendar.
Before we wrap up the show here, Eric, let's circle back just a little bit to something that you talked about in the beginning of the show, and that was the breakdown in the London Fix this week. And just as we chatted before the show, and we recalled the event when it happened in silver last January of 2016. And again, for listeners, if they don't recall exactly, it was what, about, Eric, about 50 cents below the current spot prices that morning?
Yeah, it was more. I don't remember the exact number. I think it was 57 cents.
Yeah, 58 cents. I want to say that, if I recall, spot was around 1407 at the time, and the fix came in somewhere around 1350 or 1351, something around there. And less than a minute after the London Fix, silver was right back up over 14, and the entire market was stunned. They didn't know what to do. I mean, lots of people lost a ton of money, those people not being the banks. But what we were talking about is, from that day, that really marked the bottom, and silver began a 6-month move higher that culminated in the hours on July 3rd in that mini parabolic move upward over 21. What was the top that night? Right around 2150, if I recall. We were joking. I was watching fireworks and watching the markets on my phone. There was more fireworks going off on the spot charts than there were in front of me at the fireworks that night. So it'll be interesting this past week here with the gold fix, the same thing happening, that the London gold fix being $12 or $13 below the prevailing gold spot price, and then spot prices coming right back. They really have no explanation for why such a horrible London spot price. Again, was it just the bullion banks making a grab to steal as much gold at better prices as they could just because they know it's coming and because they can? They know nobody's going to do anything about it.
Yeah, maybe. I mean, we can only speculate. We don't know. And this particular event has even less attention being paid to it, given that, we have all this geopolitical turmoil and stuff that is capturing the headlines. Back in the example of January, eventually the largest silver producer in Poland called for a formal investigation of the London PM fix, and they wrote a letter and then proceeded with legal actions in an inquiry because they're the ones who got hurt by that. It looks like this is just footprints that indicate how desperate the cartel and more broadly speaking, the overall policy establishment are trying to keep things together. We have markets now that are managed across the board, and the mainstream media doesn't outright deny the level of management that they used to deny. I mean, people used to joke about how anyone who would speak of a plunge protection team or a desire to prevent markets from crashing were nothing but conspiracy theorists, even though this is an executive order on the books from 1987. Now we have markets that are openly managed and discussed in press conferences by central banks where they talk about how much they're going to buy or what they're going to do above and beyond management of interest rates. And some of the biggest traders in the world are in fact central banks. The central banks have become the largest hedge funds in the world, and they manage their books not because they want to make profits, but because they want to protect the banking system and they want to manage the economies. And so they manipulate markets so as to manipulate sentiment, so as to manipulate market activity and economic activity. And they continue to add on more and more management efforts every time something breaks or things begin to fray around the edges. We've had the central bank, the Fed, trying to raise interest rates with forward-looking efforts on the FOMC. Every year they publish what they're planning on doing, and they do this on an ongoing basis throughout the year too. And it's a joke when you look at what they've been saying for the last 5 years in terms of their targeting for normalizing the economy and whatnot. It's been a complete and total failure. The Fed has been unable to manage anything that they do according to what they claim that their outlook is going to be. If they were going to be graded on performance, they get a fat F. And at some point, this whole sentiment backing up the powers that be is going to fall apart. And I think we're seeing that fray right now. People are very nervous about high asset valuations across the board. And now that whole reflation trade thesis that we spoke about earlier in the show is being second-guessed by, the majority of people in the markets, that's pretty scary stuff. It should coalesce to see stock equity prices down, bullion up. And I'm looking for that in the next months. I think it's going to happen in the next quarter or two pretty concertedly.
All right. Well, we'll keep our eyes on that as well as the geopolitical scene, and hopefully we'll get through the weekend and next week and the next few months here without any escalation in conflicts in any of the sectors over in the Middle East or in Asia. So for there, we'll wrap up this week's show. For the Doc and Eric Duman,